All right, guys, welcome back. If you're a recent subscriber that's returning, if not, please hit that like button, subscribe, comment. Everything helps. In this video, I'm not only going to tell you a good way to set up a holding company, but I'm even going to tell you how to fund it and how to start beginning to set up divisions where you're not risking any capital up front. Okay, now let's go to the beginning. If you haven't already set up the entity, I would do it in 2023 like this. To get the most when you sell this company, you're going to get the most when you sell, and probably get the most if you go public. Because the way we're going to set it up, it's the way kind of like banks prefer things. And this doesn't have to be your only entity, guys. And yes, you can sell a holding company. A lot of people don't know you can actually sell a holding company. And it's actually more valuable than a regular company, obviously. But here's how I would set it up. I would set up a traditional Inc. for the actual holding company. Under a low risk code. I like software publisher. Some people go with just management company. I think software publisher makes more sense, and you'll see why in a minute, because this is primarily, the main company is primarily going to be internet based. That's the purpose of it being a software publisher. So this is how it's going to work. I would definitely do a traditional Inc. And when I say an Inc., I don't mean a LLC taxed as a C Corp or Inc. I mean a traditional INC corporation, neutral name, software publisher code. And I would think this is probably the best way to do this. And because I don't know why, I can't tell you really why banks prefer the traditional Inc. Maybe because old school, it's what they know. LLCs are going to play a part later, but the setup, first initial setup for the actual holding company, I would do a traditional Inc. More valuable when you sell it, more valuable when you go public, neutral name. You're going to set up a YouTube channel for it, because you got to have some online presence. You got to set up the YouTube channel. And the reason why I want to go with an internet-based thing, because I told you I was going to show you how to fund this company as well. This is how you're going to fund it. You're going to basically be a media company for the holding company itself. So you're not really doing business with the general public. You're just going to have the media presence. Later, you're going to set up a media company that's going to be one of the divisions. But how you're going to get money is you are going to have, when you actually get the AdSense money, that is going to go to your holding company. So you're going to set that up, and you're basically just going to do, it's going to be a media company on the outside, but it's really going to be kind of just an affiliate marketing company. But you don't want to say affiliate marketing company. It looks better to be a media company. That's why I say the online presence is important. And yeah, your only risk is what you may do wrong with the actual YouTube channel, but you don't have to directly own the YouTube channel either. You can have that under your division later, the media company division. But you're going to use the same name. So whatever your name is, I would probably make that the YouTube name as well. It doesn't have to be owned directly by your holding company, but I would have it the same name. So when people look for your online presence, it's on the YouTube channel. If that makes sense so far. Now your divisions. Well, let me go back to how you make money. Affiliate marketing is how you're gonna initially start making money. You're gonna start, obviously, posting every day. That's gonna build traffic. You're gonna put some affiliate marketing links for whatever you're interested in. I like to stay with fintech banks. You can refer every fintech bank, every credit union, if they have an affiliate program. You get the picture. You put the links under your videos. Eventually, you get some signups. Now, that's going to be for your holding company funds. Now, let's get into starting your first division. And I would say you could go up to 5. I would say go up to 5 different divisions, and you'll see why the divisions are important later. You're not spending any money to set up any LLCs up front. All you're going to do for each division is set up a different domain, a different website domain. That's going to be your division. So for example, you want to do your actual media company, get your website together, have that a similar name as your holding company without being the same media. Now that's going to hold your actual YouTube channel, and that's going to be your media presence. Let's say you want to do transportation, whatever rides, that's going to be a separate domain. Until you make money, you do not need to set up the LLC for these divisions, because the money is going to go into the holding company. The money is going directly into the holding company. You're not at risk until you start making money. And by the way, you're not actually a real business until you start making money. A lot of people don't understand that. You're not a real business until you start making money. So in the beginning, all your divisions could be set up through Stripe and PayPal, whatever payment processor, to go directly into your holding company. It is until you start making money that you're at risk, and then that's when you might want to start making a few dollars. I would say at least $1,000. That might be worth you setting up now your first LLC for your division owned by that holding company. Now, let's say you have a property. Obviously, that's going to be a separate division, separate LLC. And these are going to be pass-through LLCs. They're going to be taxed as whatever the holding company is. So only the holding company has got to file a tax return. The LLCs are not. The LLCs are to hold your different divisions. And you can have a division for whatever business idea you want to get into. You want to have a hair salon, that's going to be a separate LLC owned by your holding company. Now, once you have at least 5 different divisions actually set up as LLCs, you have probably one of the most profitable holding companies in, I would say, probably most of America, if you pulled that off and say each company is only bringing in $5,000 a month. So your holding company is bringing in $5,000 a month, and each division is bringing in $5,000 a month. What I would do is I would move probably 80% of the money up to the holding company, where it's going to get taxed at anyway. And people don't like traditional inks because they're afraid of the double taxation. I say, why are you worried about double taxation? You don't get double taxed until you start taking out money for your payroll. So as long as you're leaving that money in your company, you're only paying tax on the company. So I wouldn't worry about double taxation, and definitely talk to your accountant, because there's a way that even C Corps could save you a lot of money. And I'm just talking about the holding company at this point. The LLCs are not going to be taxed because they're owned by the holding company. And you only need to take payroll from the holding company. Now, if you're going to have employees, what I would do is I wouldn't have them directly linked to your holding company. I would set up a management. That's when you're going to have just a management LLC. And that management LLC is going to have probably as much money as your holding company in it, because you're going to have to pay payroll. That's what's going to cover payroll for you. So you're going to keep most of your money are going to go from the different divisions to the holding company, and then the holding company could send more funds if needed to the management company to pay whatever employees you might have. But as far as employees, I wouldn't jump the gun. I would say stick to independent contractors, people you can hire like Fiverr, Upwork, and people you may know personally. If you could get them aboard and help you get your business off the ground and throw them a couple dollars under the table. I know, the IRS might be listening, so let's keep that in the low. But just until you make a reasonable amount of money where you can pay somebody at least $30,000 a year, then I would say it might be worthwhile to bring aboard a real employee. But I wouldn't do that until the company's actually generating enough for you to make six figures by yourself. Once you've gone over six figures, we'll say you're making an extra $50,000 a year. I would say, okay, now you can bring in an employee to run the entire business, and now you can step away. And this is kind of my plan for my media company that I'm building out. I already have a holding company, but that holding company is going to be for anonymity. I want a holding company brand new that I could basically structure just to show you guys how this stuff works. And I have a partner program that I like to just put out there once a year just to see who's interested, where I'm going to actually do this. This is going to be a new C Corp in my state. I will be acting president, of course, but I'm looking for possibly 4 partners. Husband and wife count as one. So if you're a husband and wife, you only count as one partner. I'm looking for 4 partners to go in on this for a very small investment and of only $5,000 each. I would put in the initial startup costs. You guys will come aboard and invest another $5,000. It doesn't have to put in all at once. And this is going to give the company even more, it's going to make it look even more legitimate, if that makes sense. Excuse me. Because you have different directors. If you have a C Corp in Connecticut and you're all the directors, it kind of doesn't look as legit as a corporation that has 5 different directors, even if some of them are in different states. It looks more legitimate, and we can all play a role in promoting the company. We're not going to take a salary for at least probably the first year. I want to be honest with you guys. We're probably not going to take a salary for the first year, unless for some strange reason the company just blows up quickly, which is rare. Get this up and running just to go after the big funding, because when you have like that many people and they all go on a loan and they see revenue going in, because we're using the revenue that you're putting up to actually go in the corporate bank account. You see what I'm saying? I'm manufacturing, putting in money. Based on that money, we could possibly go for funding right out the gate once the company's established and starts making some money, and you have a respectable account at a regular bank, say at like Chase, and we're still go to like the the fintechs. We're still gonna go to like the credit unions. We're gonna do all that, but with the same corporation. Now I'm gonna do this anyways, but I'm giving 4 partners the opportunity to step up and invest in this on the ground floor, with the hopes that this will be something bigger. Now, I'm going to be doing, the reason why I'm going to be president is for just my vanity, is because I'm going to be doing all the work. This is basically going to be a media company, just like I described, that does affiliate marketing. But I'm going to be doing all the work, all the content, most of the promoting. So I'll be the acting CEO, but I'll also be the marketing department. You guys, all you need to do is market it in your state or your town or to your friends and family and get them signed up to the website that is going to be a subscription-based plan that's also going to keep the company funded. And after a year of getting funding, we could step back and look, and we could possibly start taking a percentage. I wouldn't say a actual paycheck, but we could probably take that initial $5,000 back after the first round of funding. So now you're operating on pure capital of the company. So it's like you didn't put up any money to spend. Unlike the black table, we have a clear plan on how to get paid back. You're getting paid back from the funding. And then at that point, it's up to the company to pay back the loan. So we're not going to take any profit, but we will get our initial investment back, if that makes sense. I won't get 100% of my investment back, because most of mine is going to go into the setup and to do the marketing. But I'm good with that, because this is possibly something that could blow up later. And then if one of the members happens to have better credit than mine, there's a possibility we can go into a loan together, or they could just go on a loan, and the company, it's going to be backed 100% by the company, so they're not paying the loan back, but they're just on there as the PG, personal guarantee. And that's just going to increase how much credit we get and how fast. So if you're interested in this, I'm just putting it out there. It's going to be in the membership, and the link below for the membership. Become a corporate hustler. Link below if you're seeing this on YouTube. And that's how this is going to go, guys. I only need 4 people. The reason why I need 4 is because we need 5 total. I break the tie by being the 5th. And when we make decisions on how to move forward in the company, I don't want it to be a tie on the voting. That's why I like 5. And I don't want husband and wife, because husband and wife, as 2 separate people, would always vote for each other. You know what I'm saying? Or possibly vote against each other if they're mad. So that's how we're going to roll with this partner program. Originally, I called it the Black Table. I don't even want to use that name anymore, because that's like a negative connotation with it. Connotation with it, sorry. And we're just going to call it the Partner Program. Holding Company Partner Program. If you guys are interested, send me an email, willblanding@gmail.com. Should be linked below for my contact information. And I hope at least 2 people this year are interested. If not, we'll just keep putting it out there. you know, but I'm actively going to build this, which makes it more valuable later. So that's why I say it's better to get in on the ground, because once I set this up, it'll be easy for me to get the partners, and you guys will be out, you know, because the partners will be coming in quick because they see the value because I'm already set up. I'm trying to get you in on the ground floor, you know, kind of like the pre-sale of this, because I know I'm going to get the partners once this is all set up. It'll be easy. So thank you guys for your time. Yeah, I'm sorry I didn't want to put my face on this one because I look a mess this morning. But thank you guys for your time. Subscribe, like, comment, and again, I'll see you guys in the next one. Thank you.